Hi, and welcome to another HC Media Group training course, where today I'm going to be looking at a balance sheet. So, teaching you how to understand the balance sheet, teaching you where some of the figures actually come from to produce a balance sheet, and dispelling some of that myth around a balance sheet is really difficult to understand. So, I'll explain that in much more detail after I tell you just a little bit about myself. So my name is Joe Hamilton. I am an award-winning author in business, and yes, I have a book out there on the wonderful Amazon, and it's a book about, yeah, you've guessed it, digital marketing. But what's the book called? I hear you say. So the book is called Cake. Yeah, that's right. It's called Cake. Why cake? I hear you say. And put quite simply, I just thought cake, it's just got all the ingredients that you need to be a successful marketeer all rolled up into one book. So I thought, what a great name for it. So it's called Cake, and it really is a good read if you're looking for to find out just a little bit more about digital marketing, how it works, how to be successful at it, etc., etc. Then please just jump onto Amazon and search for Cake. As I say, it really is a good read. I'm the managing director of HC Media Group. We have set up our business about 2 years ago. We're based in Colchester, and about 10 months ago or so, I would imagine now, we moved into some new offices. And since we moved into our new offices, our business has just gone from strength to strength. It's really taken off. We're the fastest growing marketing agency in Essex. And a lot of that, I guess, is probably down to the office environment and making sure that we have all of our team around us rather than working in isolation. So the office environment really works for us. As I say, we are the fastest growing marketing agency in Essex, which we're really, really proud of. Just a little bit of history before starting up HC Media Group. I've managed over 200 retail stores, must be. Looking after business management, so everything from improving culture, developing teams, motivating staff, to looking after HR, which is around recruitment and retention, and the finance side of the business. Again, making sure we drive that bottom line through effective and efficient management. So I've done that throughout my career, and so my specialism is in growing business through business management and finance. And I've worked with several household names up and down the UK, some of which I'm sure you're familiar with. So many years ago, I started off with the wonderful Whitbread. So you may remember Whitbread Inns, really, really good business. With them for a number of years, and then moved into to work in Thresher. And I started off in Thresher. I started off as a branch manager in Thresher, running one of their off licenses. So you may remember Thresher was the biggest off license player in the UK, probably in the 80s now, I would imagine. So I started off as one of their branch managers in a Romford store, 10 staff, and it soon became a flagship store with a really, really great team, and it was one of the most profitable stores in the business at that time. And so much so that I got promoted from it. So I wanted to share some of my experiences and some of my knowledge throughout the rest of the area, and became an area manager for Thresher before moving into a regional manager role. Again, something that I really, really enjoyed. And then I thought, crikey, what other businesses out there could I influence? What other businesses could I share my knowledge and my experience with? So I then moved across to the cooperative. Again, you may be familiar with the co-op. I've been an area manager with the co-op for a number of years. Before recently, my last employment was with Well Pharmacy. So Well Pharmacy, well known, really, really good business, stores up and down the country. And I was an area manager for Well Pharmacy for about 11 years, actually. And my area was Essex and North London, and all the trials and tribulations that come with stores in and around that area. But as I say, really, really good business, 25 stores, about 260 staff. And it was a really, really successful area again. And very profitable. So again, I thought, "Crikey, maybe I could do this for myself. Why don't I start doing this for myself?" Which is why I moved into setting up HC Media Group. But in addition to working for the household names, I've also worked for hundreds of smaller businesses on a consultancy basis. And some of them only had 4 or 5 members of staff. So again, I was brought in just to take a look at the culture within that business. What could I do as far as developing teams are concerned to get the maximum effort out of individuals by motivating them, and more importantly, I guess, looking at the effectiveness and efficiency within the profit and loss to drive that bottom line. So as I say, I've worked with hundreds of businesses doing that, and I've really enjoyed it, and that's why I'm doing the training for HC Media Group, is purely because I want to be able to share some of the experiences that I've had, and something that, some of the tools that I've used that have really made me successful in my career so far. So if there's anything that you would like to get in touch with me about, I just want to have a chat just on a one-to-one, then please do. It'd be good to talk to you. Just email team@hcmediagroup.co.uk. That email is team@hcmediagroup.co.uk. It would be a pleasure to talk to you. Okay, so back to the training. And again, I just want to talk to you about a balance sheet. So there's a huge myth around what's a balance sheet, how come it's so complicated, etc., etc. So put quite simply, the balance sheet is a statement of the assets and liabilities within a business at any one point in time. And the balance sheet, it's been described in the past as a snapshot of the company's financial condition. That's it. That's it in a nutshell. And I'm just going to show you an example of a balance sheet. So a balance sheet would look very, very similar to this. Again, an accountant would probably put all of this together for you, but I just thought perhaps you should be aware of it. And I'll just go through each line and tell you exactly what they mean. So again, a balance sheet, as you say, is a statement of assets and liabilities. And the balance sheet will be divided into two because of that, which is assets and liabilities. So in this particular example, again, apologies for the dollar sign, but, so we've used dollars in here. So the current assets within this business equate to £69,000. And that's made up of cash, any investments, prepaid expenses, etc., etc. So the current assets are 69,000. The fixed assets within this business, so fixed assets will be property, any leasehold, and so forth, come to 180,000. And other assets, so there's a charity there which is worth £20,000, and the total assets for this particular business is 269,000. So you then have to make this balance as far as your liabilities are concerned. So the current liabilities for this business is accounts payable. So they owe 40 grand. Any accrued wages goes in there. So this is all the liabilities that this particular company has at this moment in time. And again, for this example, the liabilities are 65,000 quid. There's also some long-term liabilities. So the mortgage that's payable. So they owe £100,000 in the mortgage, which is fine. Those two added together is 165,000 quid. The total assets are 269,000. So happy days, because we then have 104,000 to make up. So how do we make up the 104,000 quid? And again, I can see a slight little error in my example here, in the fact that I can't add. So what we do then is we look at sharing that extra money, that 104,000, as far as shareholders are concerned, because we've got to make it balance. We know assets are more than liabilities at this moment in time, because we've got 269 compared to 165. So that leaves us then with 104,000. So how we're going to make the books balance is The investment capital you'll see there is 39,000 quid. That is the amount that we're going to share with our shareholders. So that's the shareholders' dividend, which is £39,000. And then the accumulated retained earnings is 65,000. So we're going to keep back as a business £65,000 as working capital. This is where my slight mistake is, because 65,000 and 39, for those of you that are really good at addition, should be 104 rather than 100. But so you get the gist of it. So the total amount of assets, as I say, 269,000 quid. The liabilities, which is what the business has to pay out, comes to 165, and the remainder, which is at 104,000 pounds, is then you can put the whole lot in an investment capital and pay your shareholders a larger dividend. However, you then have no working capital. So it's important that you keep back sort of retained earnings, as it's called. So you've got some working capital to be able to continue for the next 12 months. And that is it. That's what a balance sheet is. It could work the other way. It could work that perhaps that you are in a minus figure, which is slightly different, because then you would have no shareholders payout, and you'd have to do something completely different to start driving more assets or driving more profit in the business. And that's all it is, as I say. It's just balancing the books, assets against liabilities. So broken down in a simple manner. So your assets are anything your company owns, whether that's cash, whether it's vehicles, investment in buildings, and office equipment, etc. They're all of your assets. And your liabilities are your business debts. So any accounts payable, mortgages, loans, etc., they're all of your liabilities. And one offset against the rest will determine how much the shareholders' equity is. So the shareholders' equity is the amount of money that balances liabilities against assets. So as I say, the number can either be negative or positive. If it's positive, the company has enough assets to cover its liabilities, so happy days. If it's negative, the company's liabilities exceeds its assets, which is not a great place to be, of course, particularly if you're looking for investment. But shareholders' equities can be reinvested in the company or paid to shareholders as dividends. So again, that's the difference between those two on that sheet. So retained profit. There is some more information on that email address, which is learn.g2.com balance sheet. I've just given you a brief overview, but it is there is much more information on that particular website there. And that's it. That's a balance sheet done and dusted. So if you do want to talk to me about what you've just learned, please do. Please just drop me an email, team@hcmediagroup.co.uk. As I say, I'd be delighted to speak to you. So again, just to confirm, that's team@hcmediagroup.co.uk. I hope you enjoyed this part of the course. I've been Joe Hamilton. Thank you for listening.